Let me start with a very direct question. When a crypto asset moves nearly $3 at its peak to around $0.01, people don't just ask what happened, but they start asking, who dumped it? Was it a rug pull? Is it over? Or did the team abandon it? And today, we are going to break down one of those cases that has been circulating heavily in the AI crypto narrative space. And I'm looking at projects like Node AI and the broader GPU infrastructure narrative. This includes a comparison people that are making around projects like Nosana. But I want to be very clear from the start. This episode is not about spreading fear, but it is about understanding why these types of tokens collapse in price even when the idea still sounds strong. Because that gap between idea and market performance is where most investors get trapped. First question, who is dumping Nosana AI? Let's address the headline question directly. When people see a token fall from $3 to $0.01, the instinct is to assume someone is dumping aggressively. A group of people is exiting or something illegal is happening. But in most cases, it happens in micro-cap crypto tokens. There is rarely one dumping. There is rarely one dumping entity. What actually happens is usually a combination of many factors. For example, early investors exiting. People who entered at a very low valuations, they are now taking profits during hype cycles. When you also look at things like liquidity thinning, if buy orders disappear, even small sales crash the price. Look at what happens when the market makers reduce exposure. If volatility increases, liquidity providers also pull back. We've also seen panic sellings from retail holders. So once the momentum breaks, emotional exits accelerate downside. So instead of one actor dumping, what you usually see is a liquidity vacuum combined with scattering exits. That is important to understand. But now with the case of Nosana, it is really difficult to understand how a token with just 100 million supply still collapses this much. This is one of the most misunderstood parts of crypto. People look at supply and say, yeah, it's just 100 million tokens. It shouldn't crash like this. This cannot be happening. But supply alone means nothing without liquidity structure. This is something that actually matters the most when you look at circulating versus locked supply. If large portions were vesting, if large portions were locked allocations, team reserves, then effective circulating supply changes over time. If there is only a small amount of real money supporting the order book, even small sell pressure collapses the price. If the exchange listings are lower tier or it is listed on thin exchanges, this amplifies volatility. Look at the holder distributions. Even if there is just 30,000 holders, now with the case of Node AI, if top 20 wallets hold large percentages, liquidity is thin, retail is fragmented. Then price stability is still weak. So the key insight is holder count does not equal price stability. The holder count does not equal price stability. Ladies and gentlemen, what should a drop of $3 to 0.01 actually signal here in the case of Node AI? So this kind of movement usually signals one of these things in my own perspective. This is scenario A. Narrative collapse. The market no longer believes in the short-term story. The market no longer believes in Node AI story and is building infrastructure. Scenario B, liquidity exit phase. Early liquidity is leaving and there is no new inflow replacing it. Scenario C, execution gap. The product idea exists, but adoption is weak. Partnerships are limited. Usage is not scaling, and the market reprices accordingly. So it is very important not to jump into conclusions like rug pull without evidence. That would be a very, very big accusation. A rug pull is a specific accusation involving intentional abandonment or fraud. And that cannot be assumed just from price action alone. I have seen some comments on CoinMarketCap, people speculating about Node AI rug pull, that they are now pulling out the money. The website, I think the website was down for like 1 day or two, and people were speculating that actually there is a rug pull happening. Let me look at the core idea, the GPU and the AI infrastructure. Was this a strong narrative in first place? Let's talk about what these projects are trying to solve. Tokens like Node AI and others in this category were all built around a real idea: decentralized GPU access for AI computing. So the logic is simple. AI needs GPU power. GPU power is expensive. Decentralized networks can reduce cost. This overlaps projects like Nosana, which focuses on GPU infrastructure and the distributed compute markets. So on paper, this is a strong narrative, very strong narrative. But here is the key question. Was the market actually ready for this? Was the market ready for this narrative? The truth is, these GPU tokens, these GPU projects are struggling in reality. This is where theory and reality split. Most GPU and all AI infrastructure tokens struggle. It is because real demand is still early. you'll find out that AI compute demand exists, but enterprise adoption of decentralized GPU networks is still limited. You'll find out that actually centralized competitors still dominate. Companies like AWS, companies like Google Cloud, companies like Azure, they already control infrastructure. They are cheaper at scale. They are more reliable. They are easy to integrate. When you look at the UX complexity, ladies and gentlemen, most users don't interact directly with GPU markets. When you look at things like speculation versus usage mismatch, many tokens rise on narratives, not actual network usage. So what happens? Price rises on expectation, but falls on execution reality. This is another concern that people raise. If a project website goes offline temporarily, it can mean multiple things. Sometimes hosting issues, sometimes domain renewal problems, sometimes back-end migration, sometimes restructuring or operational instability. But by itself, it is not proof of abandonment. I've had people blame Node AI for being a rug pull, but it is not yet there. So the key question is, does development activity continue as where? GitHub activity, announcements, partnerships, and ecosystem updates matter more than just temporary website uptime. I want us to be very careful here. Based only on price movement, liquidity collapse, and website concerns, there is no sufficient evidence to definitely label this a rug pull. But we can say something like this: the token is experiencing severe downside. The market confidence has dropped significantly. The liquidity has likely thinned. The narrative strength has weakened. But a rug pull implies intent, and intent cannot be assumed without verified evidence. So the correct classification is that this is a high risk token collapse phase. It is in a high risk token collapse phase, or there is a failed market adoption scenario depending on the final project outcomes. I'm very sorry that the 30,000 holders did not save this token. And I think this is also another psychological trap, because most people assume that when holders are many, then the project is strong. But in reality, what matters more is the active volume, it is the liquidity depth, it is the new buyer inflow, it is the exchange support, it is the developer activity, it's the real usage metrics. A project can have over 30,000 holders and still have almost no active market strength. If most holders are underwater, are inactive, or waiting for exit, then they do not create upward pressure. So if we combine all signals, a likely sequence is that the narrative launch, it was a story of AI and GPU decentralization story that attracted attention. Then the speculative surge came in. Early buyers pushed the price to hype levels around $3 peak. Then liquidity exited. Early participants took out the profits. The weak demand came in. no strong new inflow replacing exiting capital. The downtrend accelerated with liquidity thinning, volatility increasing, and price collapsing. And that's why you're seeing Node AI at 0.01 US dollars. This is the most important section here. This is not about Node AI specifically, but it is about the entire category. Narrative is not adoption. Just because something sounds futuristic, it doesn't mean it will widely be used. It is also very important to understand that liquidity matters more than just supply. So even small supply tokens can collapse if liquidity disappears. The sector of GPU and AI, it is real, but it's still in experimentation phase. That's what I can say. But can Node AI come back? Can it come back on the market? Can it get back on its feet? Technically, yes. An asset can recover if development continues, if liquidity returns, if new narratives emerge, if new partnerships and adoption happens. But recovery is not automatic. It requires real execution, not just belief. Ladies and gentlemen, crypto is full of cycles where ideas are powerful, where execution is delayed, where markets punish delays aggressively. So projects like Node AI sit in that uncomfortable middle space, not fully dead, but not fully alive in the market terms either. And that is often the most confusing zone for investors, because it forces a difficult truth. In crypto, vision is not enough. Timing and execution determine survival. This is Daniel Earnhardt, and you're listening to the Crypto Investor Podcast. And the takeaway from today's episode is just simple. Do not confuse narrative collapse with technological failure. And do not confuse price collapse with certainty or fraud. Because in crypto, the truth is always more complex than just the headline. Bye for now. See you in the next episode.